Alright guys, this is a quick video to share trading plan of USD with you. So without any delay, I will take you to USD chart because this video is more about the technical setup that we can see on the chart, and I will also include economic data and other influential factors. But let's start with the chart first. So let's go to the chart. All right, so here we are on the USD daily, sorry, not daily time frame. We are on the 1 hour time frame. However, I would like to take you to the daily time frame first before we discuss anything on the 1 hour time frame. So if you look at this pattern, this looks like a W. So this actually is making a butterfly. So you can consider this point as the X, and this point as A, this point as B, and this point as C. And finally, 161.8% extension, this point as D. So this area was 1782 area. However, the price already penetrated above it, hit the round number 1800 and came back. And the magnitude of the downside this time is bigger than the previous one. So if I turn off the crosshair and take this line, so you can see this is the magnitude of previous retracement, but recent retracement to the downside is actually bigger than the previous downside movement, which is showing some sign of bearish movement. And today's upward move can be used as upward retracement to get a better price in the sell entry. And we are waiting for a triggering action. So look at this retracement and this retracement. Retracement already is bigger. And there are two things in our favor here. Number one is the reversal pattern, which is a butterfly. So butterfly has been completed with 161.8% extension. And then there is a bigger downward move, upward retracement. And now let's talk about the triggering point. So we have a minor resistance level here. And this is the previous swing high, which is a minor resistance. Now price actually reacted from this area and came down, making this red candle. But there is not much reaction. It looks like it's consolidating to the sideways, and we have to wait for further confirmation. So what we have decided is to wait for price to fall below this previous red candle. So this red candle has made a low of 17.26.9. So we want to take a position below 17.26.9. There are two ways of doing this. One is aggressive, another one is conservative. Aggressive way is to just place a sell stop order at 17.25.9, and conservative way is to wait for the closing of the candle, 1 hour candle, below 17.26.9 to see whether there is a sustainable magnitude to the downside or not. And then we will enter manually below that area. So 17.25.9. So this is how we are going to enter. To exit this position, we will target something around 1700 area or 1705, this previous low. This is the previous support. Market came down to 1702. So there are chances it can go to 1702 once again. So this previous support will be our target. In case we get this opportunity and we actually enter the sell position, there should be a plan to exit in case of loss. This plan is very simple. This is the previous resistance. Now market reacted from the same resistance. So obviously our stop loss should be above this resistance. Right now, price is looking dynamic. It looks like we're not going to get this opportunity to the downside, and it's looking like it's going to the upside. However, even if it goes to the upside, penetrate above this recent high, which is something around 1737, and it again comes back and closes 1 hour candle below 1726.9, we can still take the sell position, and we have to use conservative way to exit the position in case of loss. What is the conservative way? The conservative way is to simply wait for the closure of the 1 hour candle above this previous high, or if any recent high will be made above previous high. Let's say maybe 1738 or maybe 1740, whatever will be the recently made high. We want candle to close above that high in order to consider that the bearish setup failed, and we have to accept the loss and exit the position. So this is the technical way of understanding how we are going to enter and exit in case of profit and loss. Coming back to discussing the influential economic factors or data which may impact this trade. So there is nothing today. Tomorrow we are gonna get GDP, which is prelim GDP. So there are three GDPs. One is advanced, another one is prelim, another and the final. There is a final one. So the first released advanced GDP is the most impacting news. Second, which one is preliminary, which is not so important, so we can ignore this prelim. Just like and I hope that this will not impact as much as any other data can impact. I mean, as much as advanced GDP can impact. And this is not one. This is not only one thing, which is why I'm ignoring this. There is another thing. The data is delayed. For example, you can see the CPI. CPI was way less than the forecast. However, it didn't impact the US dollar. Dollar index was already down. It was market already priced in the expectation of Fed interest rate cut. So CPI, negative CPI didn't impact much. So we can expect that this, even if the GDP is gonna, this prelim GDP is gonna be a negative, this is not going to impact much because traders are not going to pay much attention to this delayed data. So there are two reasons why this is not as impactful. Number one, delayed. Number two, this is not advanced GDP. This is prelim. So we can rely on this technical setup, and we can enter the central listening USD if we get the chance to do this. It means if we see the price, it's now going to the upside. If it comes down, closes below 17.269. Otherwise, we will sit on hand and we'll do nothing. So that's all in this trading plan today. Thanks for watching.